Welcome, Tradespooners, and let's take a look at today's pick for short Seagate, symbol STX. We're looking at the risk reward at 5 and the value momentum at 4. And as always, you can take a look at our analysis report that gets in depth on our fundamental and technical reasons of why we're looking at a short position in Seagate. The price action, the stock closed on February 3rd at 51.09. Right off of the 52-week highs of 62.76 and above those 52-week lows at 26. We have vol on the move, and there was earnings earlier, and we'll get into that in the section where we'll talk about fundamentals and the events that drive implied volatility. The return on capital is 25%. The probability of success right now is being measured at 70, and the estimated move into February expiration is $2.35. And as always, hover over those question marks, and that'll explain how we came up with those particular statistics. The stock trade, we're going to be selling short, ticker symbol STX. We're going to put a limit order in at or right around the opening of 51.09. Our target gain is going to be below that entry price by $7.20. So we're roughly looking at right around a $44 buy limit, good until cancel. And we're going to put a sell stop, $7.20 above that entry price, which get us out right around $58.30. And we have both those working good till cancel. And as always, we suggest that you use somewhere between 3 and 5% of the cash available or percentage buying power. Now the options trade, we're going to be buying the February $50 puts. We're going to put a limit order to buy those puts for $1.22. That means we're going to put a $1.22 debit in. Once we're filled at $1.22 or better, we're going to put a sell limit above our entry price, so that would be roughly around $2.44. We have a sell limit working good till cancel, and our max loss is going to be the debit we pay, or the $122 per contract. Now remember, we do suggest somewhere between 2 and 10% for you smaller accounts of either cash available or percentage buying power, but be very prudent on your size management. The options trade, we're looking at selling a call credit spread where we're going to sell the $52 calls, $52.50 calls at 80 cents. So we're receiving 80 cents. Now, we don't want to have that unlimited risk to the upside, so we're going to buy an insurance policy. We're going to buy the $55 calls for 30 cents. That's going to reduce our credit by that amount, but it also reduces our risk or caps our risk to $2.50. That's the difference between the strike I sold and the strike I bought. So our max profit is going to be the credit we receive, which is 50 cents. Our risk is the difference between the strike prices minus that credit, so it's $2. Now we're going to put in a stop loss, though, above our entry credit of 50 cents at $1. So we're going to risk 50 cents in this trade. So we will have a $1 stop limit, whether that's mental or you're going to put in a stop limit, a buy stop limit on this spread. And I would suggest doing a limit of $1. Now, as always, you can place a virtual trade here on Tradespoon to test out these strategies, especially if you're new. And you'll see this gap here on the stock charts here from taking a look at the background analysis here. And you see that gap here, that's going into earnings. It's been a little bit flat. It has taken a bearish tone over the last few sessions. And as you can see, it missed its earnings estimates under the key stock events, and you're seeing the other fundamental and technical components. Keep an eye on this section, and as always, take a look at the news and commentary. This will give you the background of what's been going on recently in the underlying. You can always email us at info@tradespoon.com. Keep an eye on the recent picks as well as the performance. And you can always take a look at the volatility charts at our good friends over at Trading Block, and you can see, as I had mentioned, vol has been on the move. The green line has been on the uptick off of the lows, which were at 24 on the implied volatility at 32. Now, that might come off now that the earnings are out, but especially if the trade starts to get a little bit more dicey and the market has been under pressure, you could see implied volatility continuing to move to the upside, which just means that there's a heightened sense of movement. Well, folks, that is the pick for February 4th, 2014, short Seagate Technology, ticker symbol STX. We'll see you tomorrow, and have a great trading day.